Jordan, very good to see you. Today, we're going to talk through 3 considerations before making a Roth conversion. Roth accounts are an amazing tool when it comes to creating wealth. Roth IRAs are not subject to RMDs, and they can pass on to your heirs tax-free. But before making a Roth conversion, we suggest you consider a few things. First one being, what will your future tax rate be?
Yeah, so we don't believe in just doing a Roth conversion. We want to do incremental Roth conversions based on your tax rates now and in the future. Because maybe you're retiring, maybe something's changing. You want to look at your long-term taxes. So if we look at this chart, we can see for a single filer and a married couple, kind of the different thresholds. A lot of people think sometimes if you hit that next tax bracket, everything gets taxed at that higher tax rate, but you're only actually taxed on that $1 over that marginal bracket at that higher rate. But the one little secret thing that people aren't aware of, that tax rates are changing over the next couple of years. In 2026, they're planning to go higher, right? Legislation is in the law right now to go up. Now, with Trump just being elected, that might actually delay that. But the one thing I want people to focus on, if you look at that chart, if it's going to go from a 12% bracket, that's scheduled to go up to 15%. And many people think that that's a very small change. That's a 3% change. But in reality, to get to 12 to 15, that's a 25% increase. Yeah. So we want to show people how they can minimize that 25% potential increase. But what if the laws don't change? What if they stay exactly the way they are? I hope that people realize there could be 100% increase to their taxes and they don't even know it. The reason being is the year after you lose a spouse, you will enter into a single filing status where your taxes effectively double, and that's 100% increase while you're losing half of the Social Security because one spouse can't get the Social Security, and that gives you less deductions as well. So there's a 25% upcoming increase and maybe 100% increase for those that are married. So we want to plan ahead of time and maybe do Roth conversions sooner rather than later.
Right. And just to remind everybody too, the deadline for those Roth conversions is the calendar year. You don't have up until the tax filing deadline.
Correct. You have to convert before December 31st, but have a plan, I would say early December at the latest, so you make sure that custodian processes it before December 31st.
Yeah, good point. All right. Second consideration, ask yourself when you'll need access to those funds.
Yeah, a lot of times when we do planning, we kind of design the money to design what you want to do with it. Is it for income? Is it for growth? Is it for legacy? And if you need that money sooner, maybe we don't do a Roth conversion because we want to wait at least 5 years on that Roth conversion to get that tax-free growth. But for some people, maybe you don't ever need that. You can let that grow. Then we want to do a Roth conversion and maybe be aggressive with those funds because all that growth, so if you convert 100,000 and that grows to 500,000, all that growth, if you wait 5 years, will be tax-free. So it's a powerful tool, and a lot of people, they should be a little bit more aggressive with those Roth IRAs.
And then last, when considering a conversion, it comes down to one important question. Do you want to pay tax on the account, or do you want your beneficiary to pay the tax? And then you have to consider, what will their future tax rate be?
Yeah, so it's a give or take, right? Do you want to pay the taxes while historically we're at lower rates? Or do you want to pass that to the next generation and have them pay the taxes at maybe much higher rates, right? That's a decision you and your family have to make. The last thing I'll throw in there, if you want to give all your money to charity, do not do a Roth conversion. Just leave that IRA to the charity, and the charity doesn't pay any taxes. But I think that's the minority of people probably listen to this. So we got to calculate our income now, our children, our beneficiaries, whose income is going to pay it, and then make a wise decision for our family.
Again, that tax-free income is so important, Jordan, so powerful. Are there any other strategies we should be considering other than Roth conversions?
Roth conversions are great. They get that tax-free growth, but some people, I don't want to take a lot of risk. I just want to make sure that this money transfers to the next generation tax-free. Some people, some clients of ours, they take money out of their IRAs and just funnel that into a life insurance policy. Not only is that going to potentially grow with the market growth, it also is going to give them instantly a tax-free death benefit. So they'll get that death benefit to the beneficiaries tax-free outside of the IRA. And the third benefit is it actually can provide them long-term care chronic illness benefits without them paying anything extra for those. So it can be tax-free income in the future, tax-free death benefit, and some long-term care if they decide not to do a Roth conversion.
And again, one of the reasons we are having this conversation today is that we are living in a historically low tax rate. Many financial experts believe the Tax Cuts and Jobs Act of 2017 that you just mentioned, Jordan, reduced federal income tax rates to the lowest they may ever be. And as you said, these cuts are set to expire at the end of 2025.
Yeah, the goal is to take action before they go higher, even with the new administration. Maybe they delay that for a few extra years. We believe, and many people believe, that taxes have to go up. I like paying things on sale, pay the taxes while they're on sale now. We're in a sweet spot in the U.S. Tax bracket historically. We want to take advantage before it's too late, or God forbid we lose a spouse and we have a 100% increase on our taxes.
Good point. Well, Jordan, if somebody would like to speak to you about creating that tax-free income, what's the best way to reach you?
They can call our main number, 847-499-3454. We would love to provide financial leadership.
Great. Jordan, thank you.
Thanks, Aaron.